Bismillahirrahmanirrahim. Our paper is titled Can Crowdfunding Lead to Greater Access to Islamic Finance in India? So this paper was written originally by myself and Dr. Sharik Nisar a few years ago, but it was updated for the purpose of this presentation. So what is crowdfunding, first of all? Crowdfunding is when we use platforms, typically technological platforms, to get access to a large number of investors. So instead of a business, for example, taking a loan from an institution or taking investment from an institution, it will reach out to a large number of investors, either directly or through a certain platform. So that platform gets known as a crowdfunding platform. So here we talk about two types of, or four types of crowdfunding platforms. You have social or donation-based platforms, which are purely for social purposes. Then you have reward crowdfunding, for example. So the first one you would have seen things like Keto and those type of platforms where it helps people raise donations. India Zakat is one example that is there. Reward crowdfunding is like a person is starting a business. He doesn't give equity to the people, but he says that whoever invests in this, I will give some product or I will give some reward. So that is a reward crowdfunding. These first two types are community based. And then you have for-profit crowdfunding platforms. You have two types, either debt or equity. So if it is debt, it is known as a peer-to-peer lending platform. And if it is equity, it is an equity crowdfunding platform. So the last two are return based and they are regulated. So the first is regulated by RBI and the second is regulated by the SEBI. So I won't go into these details. I've already explained this. So what is the benefit of crowdfunding? One is alternative finance, meaning if you go to a bank, you will have to raise funds or you will have to take a loan at the bank's terms. Whereas if you are doing the crowdfunding yourself, you can dictate the terms that you want it to be not interest based, you want it to be Sharia compliant. That is one benefit of crowdfunding. Then lower cost of capital. So if you have a large number of investors who like your idea, you can get funds at a lower cost than even what the bank or another investor would, institution would give you. Then there is competition. So the bank does not dictate the terms. You can compete with large institutions. It's called disintermediation. That is, you remove the intermediary and you directly raise funds from the market, and so on. So Rehbar was initially a crowdfunding platform. I'm sure many of you were there in the panel discussion. You would have heard some background that Rehbar started off as a crowdfunding platform where we would just enable businesses to raise funds from the investors. So it was started in 2013 after a lot of brainstorming that happened. And it started mainly with profit sharing loans. So the business would say that this is the business that I'm doing and I need this much funds and I will be able to grow my business and increase my profits, which I'm willing to share with the investors. So we would study that business and then if we found it is worthy, we would put it in front of our investor database. Whoever wants to invest, how much they can invest until the deal is fully subscribed. So that was the initial how we started. And there were various challenges in terms of the smaller businesses had their own restrictions. Then P2P model itself in 2017 got regulated. So, but what we also did is we, in 2015, we introduced Ijara. So PLS is inherently risky because if there is a loss, it has to be shared by the investors. Now, many of these investors are new to this type of investing, so they're not mentally prepared to share the losses. So we introduced an Ijara product, which is leasing based. So I can purchase a machine and give it to somebody, and they get a rent from them, which is more or less predictable. So that reduces the risk. So that was introduced in 2015. We got certain clients like ID Fresh in Bangalore, like Prime Care Hospital again in Bangalore, who took this equipment or vehicles from us on a leasing model, and that was still on a crowdfunding platform. Then in 2017, what happened is that the RBI came out with rules about P2P lending. They said that, for example, any lender on this P2P platform can only invest 50,000 with one person, and all together they cannot invest more than 10 lakh across all P2P platforms. Then all these restrictions were there in this P2P regulation, and you had to become an NBFC P2P if you want to continue this business of P2P platform. So because of this, as well as other challenges, because we wanted to give diversification to our investors, we don't want an investor to invest all his money in one deal. So because of that, what we did is we pivoted, we changed the model. We transitioned to a structured financing model where we were taking the funds as Rehbar and then investing in businesses. So now I will talk about this second model, which this is talks about what I've already covered. So these are some of our clients: ID Fresh, Prime Care Hospital, Timescan Logistics, Trojan Plywood. You might have seen some of these names. And these are all also not necessarily Muslim-run businesses. There are also non-Muslim-run businesses which have taken funding from us. Like the last three, Furlenco, Copy Machines, Everest Fleet, are businesses run by people from other faith backgrounds. This is the model that we currently work with. So the investors invest in SPVs, special purpose vehicles, called RERL, Rehbar Equipment Rental Private Limited. And these SPVs then deploy the funds in various businesses through Ijara or through Musharaka, profit sharing loans. And the profits that come from these businesses is then returned back to the investors after certain fees or profit sharing that takes place. And so what is the benefit for businesses? What is the benefit for investors? For businesses, they get funds to grow. There is no equity dilution. We do not take an equity stake in the business. And the payout that they make is based on the asset that they have or the performance. And they do not have to manage multiple investors. Like if they do crowdfunding, they have to manage multiple investors. Now they're only dealing with us. They have a long-term financing partner, and it is ethical financing. That is a Sharia compliant model. And for investors, they have an alternative asset class. So previously it was only the stock market or only gold and real estate. Now this is a new asset class that investors have access to. They have liquidity, they can easily exit from their investment. They get consistent quarterly returns, and they've not invested in many places, so they can track all their investments with one party, which is us. And we are again a long-term investment partner, and we give Sharia compliant investment options to them. Now this is just some snapshots of our financial performance so far. So the last 5 quarters performance, you can see the line on the top is the return on fund deployment. So 11 to 13% per annum is what we earn on the funds that we have invested. And then what we pay out to the investors is the line below, which is between 9 to 10%. Deployment of funds. So you have how much is the funds deployed. You can see it's 5 quarters ago, it was about 77 crores. And it has grown to about 99 crores. This quarter it has crossed 100 crores also. Portfolio is well diversified across various industries. You have F&B, food and beverages, logistics, FMCG, B2C leasing, industrial manufacturing, waste management, healthcare, and so on. And in terms of the investment product split, it is largely leasing, that is Ijara, operating lease. We purchase the asset and give it to the customer, and we take monthly rent from them. And then second is project finance, which is around 17% of the portfolio. So if someone has a short-term project like a PO that they need money to fulfill that purchase order, we give them the money, they use it for the raw material or whatever to complete that order. And then when they get the money from the client, then they pay us back along with our profit share. And then
we have 2 minutes.
Yeah. And then P&L sharing, profit and loss sharing, which is a long-term working capital financing, which is again based on the principles of Musharaka. Again, a diminishing Musharaka is what we do. And a small portion of our portfolio is in that, only around 7%. And for the first and second project, it is not a condition that the company should not have any bank loans. Whereas for the third project, only if the company has no bank loans, we can associate with such a company. Finally, our achievements so far, we've paid over 40 crores of profit to our investors since the beginning. We've invested over 250 crores in more than 100 businesses, and we have successfully facilitated investments for more than 1,500 investors. We've received various awards like the IFSA Business Excellence Award in 2017 and the Maishat Halal Business Award in 2021. And we are also a member for the Association of Mutual Funds in India. So we are also a distribution partner for Tata Ethical Fund, which allows our investors to invest in, diversify their investment across the fixed return type options that we are providing, as well as the equity market exposure as well. So yeah, that is it from my side. Thank you.